Good morning, everybody. Hey, welcome to Wednesday, the middle of the week. It is May 12th. I want to thank you for joining us today as we get ready to talk to Dave. Today's inflation day. We're going to talk about CPI, and which will give us an indication of inflation. That's a big deal. And I think that's what's putting some pressure on the stock market. Dave and I will talk about that more as he gets ready to join us here next.
Light FM. You love her. It's 8:39 now, 21 before 9. Let's check and see what's going on with your money. And moving upsy downsy this morning off of some economic reports. Let's check in with Statler Financial Services' very own Phillip Statler, who's on the line this morning. So, Phillip, did you have to gas up your car yesterday?
No, I actually was fortunate. I gassed up on Saturday, so I've been doing well so far.
That means you may have to gas up again while they got paper bags over the pump handles, right?
It's a possibility.
Yeah, I was on fumes yesterday morning and had a couple of calls I needed to make. So about 10 o'clock, I dropped by the gas station down the road from us, and after having difficulty finding a pump with a swiper that would work, I was able to get my car gassed up, and then all heck broke loose, and everywhere I drove by in the afternoon, it looked like gas lines from the 70s as everybody started panic buying. And just to put it on the record for everybody, there were tanker trucks in town at 8 p.m. last night restocking up the gas stations, so most places are okay. So for crying out loud, people, it's not a hurricane. It's not 1974 all over again. And we get our junk in off of tankers in Tampa. We don't get it off the Colonial Pipeline. So calm the heck down. Is that direct enough?
Hey, I think you're right. I mean, that's it's definitely pandemonium based on nothing other than rumor mill from the people up in probably North Carolina, Georgia, South Carolina. I mean, those people are affected. But you're like you said, our fuel comes from Tampa, folks. It's you can get a truck here in 2 hours.
My daughter had a cute Facebook post this morning. She said, maybe we ought to start a rumor there was a job shortage.
Yeah, there is one, and we still can't get people out there to work.
I hear you. Anyway, talking about what we're supposed to be talking about this morning, and that's the economy and the markets and whatnot. I had a little bit of shock value going on because we got the consumer inflation numbers in out of the federal government this morning. Month-to-month CPI was expected to be up by 0.2% from last month, which we all kind of said, yeah, right, yesterday. Up 0.8%. 4 times what they expected. And the thing that really kind of hits you where it hurts, the year-over-year inflation number for consumer prices, 4.2%. That's the highest it's been in like 13 years. That kind of made a few traders sit up and take notice about 8:30, didn't it?
It really did, Dave, and I think we're off of those extreme lows, but still we are moving. We're still in the red.
I mean, this was not what anybody had in mind. And even with the Federal Reserve doing their level best over the weekend to prep us for this, over 60 Minutes on Sunday night, one of the honchos from the Fed was saying, okay, fine. A lot of months are going out of the averages right now because the beginning of the pandemic month was April of last year. So now we're doing May through April. And a lot of those artificial price drops suddenly go out of the average. So we expect an increase in inflation. I'm sorry. Anybody that's been grocery shopping recently will tell you the prices have been going up, doggone it.
Oh, absolutely. I just feel like you can't walk out of the grocery store hardly for less than $100 every time you go in there.
Yeah, and I'm shopping for just myself, and I have trouble getting off for under other numbers that matter. Core CPI, that gets rid of silly little electives like gas and groceries. It was up by even more last month, 3 times what the market expected, up 0.9%. The core inflation rate for the year now for a 12-month average is up to 3%. And I was watching things right after the announcement came out, and losses on all 3 of the major exchanges doubled within 60 seconds. You're telling me that folks kind of sat back, got sober, and changed their mind a little bit anyway, right?
Well, they have because the Dow had been down as much as 200 points, and we've made some of that back. Still, right now it's down 140. So, it's going to be a red day for the third straight day in a row. And Dave, I got to tell you, I'm not sure where this bottom is going to bottom out before it starts to come back around.
And we need to always throw this out whenever we go through consecutive losing days. 5% corrections, and it isn't even technically called a correction. 5% corrections in the market generally happen 2, 3, sometimes 4 times a year. So the word "don't panic" does come to mind. Right now it's being triggered by economic concerns, but there's a time in which shifts in holdings just is a wise investment decision for the guys that throw billions of dollars around on a second thought.
Oh, that's true, Dave. I mean, I'm looking here now at where we're at, and it's if I look at the 7 days, the Dow is still slightly in the green as of yesterday's close. Obviously, they'll be out of the green based on what I'm seeing right now. But the Nasdaq and the S&P 500 over the last 7 days are actually in the red, slightly, not a big deal. I mean, so.
And a little bit of, as I said, a little bit of a change, and those little 5% hiccups happen so often during the year. Let's not panic until we get an idea that we got something serious going on. But you and I have been saying for a long time that the multiples are up there, and what happens during earnings season is going to make a big difference as far as being able to maintain those multiples. If they don't, well, we're going to end up with one of those corrections that'll make a few people go, ouch.
Well, that's true, and how drastic that correction is will depend upon earnings and some of these macro events, like we're seeing now with inflation coming in. Traders have to take all that into consideration as they start to figure out what a company's really worth.
Absolutely. So we've got a surprise, not to the good side on the inflation front. As much as we were warned, we didn't take it. We are in the middle of earnings season, and that means we're going to move the market with some real numbers as well. Is anything interesting going on this morning before the market opens?
I got a few things for you today. I got a fast food restaurant, Wendy's, reported. They had better than expected top and bottom line numbers, so that was good. Their same store sales were better than expected too. So those things are always doing good. And then Wendy's went out even further and did a couple other things. They raised their full year guidance. They boosted their dividend and they increased their repurchase plan for stock. So, that's kind of the triple crown there. And they are up 4.6% this morning before we get going.
Cool. They probably gave their social media people a raise too, because they're famous for their social media defending the brand as well. Put it all together, and they've got an act going.
They really do, and they obviously the stock price is reflecting that today. And then we go to kind of the gaming industry with Electronic Arts reported. They beat also by about 18 cents a share. Came in at $1.23. Revenue was above forecast as well. They gave an upbeat annual forecast for earnings and expect that this momentum will continue even as the pandemic starts to slow down a little bit. So they were off to a pretty good start this morning, up 1.75% before we get going.
EA, I think, is going to be the survivor out of the shakeout as we go to online gaming instead of those silly boxes with their cartridges on them. They have the Madden Sports franchise and a whole bunch of the big ones. Good to see them surviving and continuing.
Yeah, we really do. And then I have an unknown name for most of us. It's called QuantumScape. They're a battery manufacturer, and they've got a contract with Volkswagen. So they're looking to do well there, but they lost 20 cents a share. They were expected to lose 7 cents a share, so much worse than expected. They had zero revenue, which is what was anticipated. No revenue. That's what everybody expected for the quarter. But the loss being bigger was a big deal. Volkswagen, they did deliver some batteries to Volkswagen for testing in their vehicles. They're trading down almost 4% this morning.
Ouch. How do you have zero revenue and still be a publicly traded stock?
Well, you got venture capitalists, you got people throwing money at them to get things going.
I suppose that kind of hits me. That generally they wait until they're an ongoing concern before they issue public stock. That kind of caught me between the ears there for a second.
Yeah, I guess they needed a little help from the outside and got it.
Evidently. Got time for a couple more. Anything else of interest that's popped in so far?
There's not really there's a lot of upgrades and downgrades here. I do have one from a company called Lemonade. And they don't make lemonade, Dave, just to set the record straight. They are an online insurance company. They only sell insurance, auto insurance online. And they had lighter than expected earnings and lighter than expected income. I mean, gross revenue too. So they were getting hit this morning down. Let's see, where did it go? I lost it here. They're down 8.25% this morning.
Ouch. I kind of get the feeling that maybe the big guns like Geico noticed them and kind of answered the online question effectively, don't you?
Yeah, they probably did. When you go up against giants like that, man, you've got to have some little niche that you're going to get that nobody else is really catering to.
I expect so. Resetting the table for the morning, it was, almost a bloodbath yesterday on at least one of the exchanges. The Dow was off by 473 points by anybody's book. That was El Stinko. Standard & Poor's was down by 36, and the NASDAQ was down by 12, which is kind of funny, making NASDAQ the winner yesterday, for lack of a better term. After the inflation numbers and some interesting quarterly reports out of the stocks that are getting traded, what are we looking at this morning, 45 minutes early?
Hey, they are off their low lows, but they are still red, Dave. We've got the Dow down 0.4%. That's like $134. The S&P 500 is down almost 0.7%. That's $27. You got the NASDAQ down 1.2%, over $160. So everything's looking red. Silver's down 1/3%. Gold's up a little over 1/10%. Crude oil's making a comeback big time today, up to $66.12 a barrel. That's up 1.2%.
I'm not surprised by that, given the pipeline situation. Supply issues got to drive some of that. World markets overseas, the Asian Rim market mostly kind of looked at us as a zero-sum game. We took a bath. They went up overnight last night. Europe is kind of following suit with us. They're off by a bit, but nowhere near as much as we are. Phillip, the ups and the downs get determined by the stocks that we buy, but they also get determined by what happens in the economy. Sometimes being prepared by minimizing one's risks makes good sense. How do I find you to make sure that happens on my retirement portfolio?
Dave, then give us a call at 863-382-0037. Check out our website at statlerfinancial.com, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730.
All righty, get back here again tomorrow morning about the same time on Light. Phillip, thank you so much. You have a good day for the rest of it, all right?
All right, man, you too.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us. Tune in every day. We've got the market updates for you right here. What's happening, not just in the markets, but the economic things that can impact you and me on a daily, weekly basis. Hey, if you like what we're doing, please turn us on to your friends, your neighbors, your family, and catch us again in the morning. Appreciate you. Take care. Bye now.